Hello, everybody. Welcome to week number 18 of 2025. This is the Build Weekly Roundup. We've got a lot in store for you this week. I think there's been some news items that we definitely want to cover, and some really interesting things going on in the Bitcoin space. But before we get into that, I want to let Matt maybe speak a bit about the podcast appearance he was on yesterday. So Matt, go ahead and take it away.
Yeah, so for everybody who knows, there's a lot of overlap between our channels, but yesterday I recorded a 1 hour conversation with a good friend, Nick Bhatia, professor of finance at USC Marshall School of Business, about the state of the gold trade, the offshore dollar, just briefly touched on Bitcoin adoption at the sovereign nation state level, and critically, um, its potential to fund the U.S. government towards a time of conflict and monetary transition. So hop on Nick's feed. It's called The Bitcoin Lair. Highly recommended. I'm sure several of you will already subscribe, but he also wrote a great book on Bitcoin called Bitcoin Age, classic layered money that he wrote a few years prior to that. But anyway, yeah, just hop onto that conversation. It's on YouTube or his Substack or X channel. Thought we did a great job covering some background and making what's really an abstract phenomenon going on with the dollar, with gold, with Bitcoin, and mapping it onto the concrete with some real world examples to put the mile markers down or the signpost down on what's going on the geopolitical front. So had a great conversation yesterday with Nick. Tune into that. It's been well received, and I'm very proud of that discussion we had.
Yeah, and I got to hear the tail end of that live in the office. I know Matt, you replayed the video for us, and even I was taking away new tidbits of information. So highly recommend that. Great. Well, let's go ahead
Thank
and
you.
jump straight into our lineup for today. I'm going to show us the three topics we want to go through, trying to make it a little more clear for viewers here on where we're at within the actual show. So to start us off, Ukraine and the dollar. Matt,
Yeah, so I'll pick it up from here. So today's big news was what's been in the works for what feels like months. There was a back and forth. Everybody remembers that, I guess, interesting may be the right word for it, but Oval Office meeting with Zelensky, JD Vance, and Trump. Not one of our best moments, but ultimately this deal got done. So what this represents right now, this phase, I think about this as like a business development engagement between the United States at the sovereign, the nation state level, and this kind of fostering startup government project in Ukraine. And what we saw announced today was essentially the creation of a new entity called the Ukraine Reconstruction Investment Fund. I don't know what the shortened abbreviation will be for that, URIF, but it's pending ratification by Ukraine. I don't know through what process it has to go through politically there, but it still needs to be ratified by some body beyond just the executive office there with Zelensky signing this.
It's their legislative body that has to ratify it.
And they're in a weird process as well with, kind of under martial law at this point. So TBD on the final details. But an agreement has been inked for a resource deal with Ukraine. The U.S. participation is through this entity that was set up in Trump's first term, the U.S. International Development Finance Corporation, which itself is a wholly owned public entity, but it is structured to invest in public-private partnerships for economic development projects at home and abroad. Well, not really at home, private capital from at home, domestic U.S. capital into projects abroad, hence the international. in its name. So this is something that came through Trump's first term. I think it was 2018 when I think the legislation or executive orders got signed, and then 2019 it was created. Obviously, we didn't have a Trump administration to follow and actually start doing things under this entity from 2020 to 2024. But now this project has been resumed, and what this represents, in my point of view, everybody's watching. Hey, when is the U.S. going to start engaging in trade deals? Trade deals, trade deals, right? After Liberation Day. Well, you've got one here. This fund is going to receive 50% economics on resource development projects in Ukraine. So what that means is, so U.S. and Ukraine are partnering on this fund, and then that fund is a 50% partner on resource development projects. So the dollars that these projects kind of generate and obtain through resource production, so what we mean by that, it's minerals, hydrocarbons, and then maybe there's some profitability on just the infrastructure development as well that's taking place in the Ukraine, everything that's not Russian controlled. Those dollars stay in Ukraine to fund further development projects. So you're hoping that this builds capital, which then flywheels into more capital, which flywheels into more projects, and vice versa, just vice versa, till you get hopefully a beautiful loop of economic production and productivity coming out of that. So the U.S. is not looking to make money per se on this deal. The dollars are staying in Ukraine. What it wants to get out of this is the actual natural resources itself. And it has as the press release has been written by the White House this morning, it's been given what they describe as the first choice to either acquire the resources or designate the purchaser of their choice. So the flows here, what it looks like is the flows of shipment of goods, and that'll take place if you go to the next slide, Cameron. Do I have control? Yep. So the goods will flow via shipping routes if this progresses as expected from Ukraine towards the United States, assuming the United States wants the resources, in its own domestic economy. And notably here, I think we're with international trade kind of in a state of upheaval and reshaping. These flows, these shipping routes would not rely on the Suez Canal, which is something I find particularly interesting. At this point, you wonder who actually controls the Suez Canal. Is it friendly to United States interests or even Western European interests? This is where, if you remember, in the last 12 to 18 months, we've seen a lot of headlines, stories, issues made with piracy, for vessels traveling past the coast of Somalia, Yemen, etc., the Houthi rebels. It's a huge problem area. You've got military activity ongoing in Yemen over the last 2 weeks. That's been in the headlines. So you've got problems if you're actually looking to move resources, for the U.S.'s benefit through those shipping lanes.
I was going to add there too.
In this case, yeah, go ahead.
I was going to add there too. It's beyond just Yemen, right? It's actually, if you think even back further in time, you've got Black Hawk Down, right? That's Somalia. So it's been an interesting region for a long time, and there's been even more recent reports of activity in Ethiopia, South Sudan, etc. So you're seeing a lot of this military activity going on in this exact region, and it's maybe not as front of mind for folks in the U.S., but it's definitely been picking up over the last couple of months.
Yeah, trade has not been moving from just logistics setup problems. the situation has not been moving favorably for the U.S. or the West for, let's say decades, right? As you mentioned, the Black Hawk Down scenario, which I know we're getting a little bit old. Maybe some of our listeners, Gen Z and younger, may not have even realized the specific incident Cameron's talking about, which was a helicopter going down in Somalia and kind of a notable disaster, I would say, in military activity for the U.S. in this specific region. But in this case, assuming these shipping containers can progress from the Black Sea through the Bosphorus, Turkey's got to be a friend here and a partner, Greece, and then through the Mediterranean, Strait of Gibraltar, across the Atlantic Ocean. I think the hope is that you've got safe, traversable shipping routes for this to actually take place, which is good for Ukraine in the end game, because if you have to ship your goods to market some other route, say across the Suez Canal for safe passage, you're basically at the whims of Iran and then the other powers on the Eurasian continent. So at the kind of the point of contest between Russia and Europe, that is kind of the fault lines run right through Ukraine. If you're on the left side of that, right, and this is what, the European kind of side of the issue is Ukraine, this is where they line up. This works out favorably for you from that perspective.
Well, there's also an implicit security component there. The agreement's notable that there's no security guarantee written into it. You're not going to ship natural resources, goods, whatever it may be, out of that area without security. So that's it's not purely economic.
So in some sense, right, NATO is not meant to protect shipping specifically, but you do have NATO countries in Turkey, everywhere to the east, or sorry, everywhere to the west of Ukraine, starting in Poland. So I think the key kind of fulcrum at this point is Europe's buy-in in this process. Can we get to an intermediate peace agreement that Europe can live with and come on board, right?
That seems
and
to be
I think
yeah.
that's the hang up at this point. Also, Russia as well. Russia wants to maintain its recognition over the 4 provinces in the that border the Sea of Azov, which would leave ports available to what we call Ukraine, right? The Western government to export through. I think the question at this point is, can we come to an agreement that both Russia and Europe, and then you kind of lump the European or the Ukrainian government in with Europe, can we get to something that they're happy with? And right now, you've got the first step in that process kind of written and signed between the U.S. and the Ukrainian government. And I think the next action on the to-do list is now figure out from a deal-making perspective, what can you offer Europe to entice them into this deal? And Europe's in a particularly interesting situation. Nick and I talked about it on the podcast with the offshore dollar, those bonds. I think if you want to hear 20, 30 minutes deeper conversation on that topic, that's where tuning into that video on YouTube will add some color. But what we get into is it's really, despite the headlines, the narratives of de-dollarization, the dollar is a necessity on both sides of this struggle. Europe needs the dollar to continue this contest. And at this point, this deal has locked in, essentially, assuming we can, actually secure these shipments and bring these goods to market, or where we want them to be as their final market. Where do the dollars go on the other side of those trade, or on the other side of the transaction, right? And we know their final destination. It's it's in that deal description. The dollars need to stay in Ukraine to fund further infrastructure development. Now the question is, where are the banks, right? I mean, there's going to be banks ultimately in Ukraine that custody and hold those dollars in reserve. But which money centers are involved in between that? So I think that's the question, and that's what you're looking for from the EU and UK perspective on what does the next step attaching onto this deal look like. So we're going to find that out, I think, in the next weeks or couple of months.
And one thing
What that looks
I
like.
want to call out here is this chart you've got inlaid over the top left here, showing where the actual minerals are, and calling out that a lot of this is in territory occupied by Russia. So I'm curious, in your mind, Matt, maybe even Dave, this already sounds like it's going to be a decades-long process of even
Yeah,
accessing
this is
those
going to
funds.
take, this is new production. Remember, this is not coming in and getting a cut of existing resources. So this is new investment. That's the whole point of this. So we could go do the research on how long it takes to spin up a new copper mine or whatever else they're going to be extracting. But
Several years.
yeah,
The copper is not in question here.
yeah.
It's graphite,
Well, no, copper is
manganese,
part of it, but yeah,
titanium.
sorry.
I have
Yeah.
not heard that copper is in particular.
Oh,
I don't know that
I read
copper
that.
is heavily
Conflicting
resourced in
sources.
Ukraine. Yeah.
Yeah. Yeah. Okay.
But
So,
ultimately,
so anyway, it's
you
going to
still
take
have
years.
the and you still have the specter of potential warfare going on while you're trying to figure out how to build these mines as well, right? So it'll be interesting for sure. This is
No, so part of this, like the tariffs, what you're actually doing is you're compartmentalizing uh, access to the dollar, right? You can't just show up at our ports anymore, arbitrage away uh, cost of labor, raw inputs, all of that to get access to dollars now. But what we don't have in the United States, like most of our domestic consumption, we can produce, right? What we don't have, there's very few things that the U.S. doesn't have on its own, and one of those were like on the short list of key items, key necessities, is obviously rare earth minerals, and not all of them are covered and available in Ukraine, but a decent chunk of them are in that country. And it's an extremely dirty extraction process, and you could source a lot of them from within the domestic, let's call it lower 48 or Alaska, right? But you run into that NIMBY problem, not in my backyard. It's an extremely dirty process, and the reality of Ukraine's economic situation. What can you do and export to the world to build up your economy? Well, rare earth minerals, right? So that's the nature of the deal. It solves a key problem that the U.S. needs to accomplish in as one of the major downsides of the tariffs 2.0 policy is the access to rare earth minerals, after China in particular, who is the world's major supplier, said it's going to hold back on exporting those rare earths as part of its response to the tariffs themselves.
got it. Okay, and so let's move over to this slide here. So you talked about first trade deal signed. Is dollars bounce confirmed? Walk us through.
Yep.
I think you already touched a little bit on the dollars component in all this, but how does this all factor in?
Yep. So I think a lot of the coverage you're going to read on this, it's a resource deal, some back and forth, the Ukraine, how it impacts the next steps and the negotiations towards a peace deal, hopefully. But how this is not being covered in my kind of framework of the global financial system is this is a dollar story, right? And we've talked about it, right? It's resources for dollars. The ultimate destination is Ukraine wants dollars, right? So what we've seen, after, a massive drawdown in the US dollar, so year to date in 2025, basically starting at inauguration day, you've got the first kind of signs of a bounce. And what's going on here, so if you think about it, the dollar kind of adoption, like winning this business development deal is good for the offshore dollar. Now, it's not the same offshore dollar that's been operated in the post 1971 order after, the gold standard was broken, all of that. The gold convertibility was broken, all the Bretton Woods iterations. It's going to be a different offshore dollar system, but it's still critically important. So this bounce you see, the DXY index, this is what's being charted here. This is what most people follow when they're following the dollar foreign exchange. It's about 50% of the weighting of this index is euro, right? And so what you're seeing here, in my opinion, is a bottoming or a bounce with the dollar picking up strength versus euro, right? Because when the U.S. comes in to sign the biz dev deal, it means all these Ukrainian resources are going to be priced and exported in dollars. Exactly. So it perpetuates the dominance of the dollar, especially from a Western world perspective. Euro's the loser here, but it's not necessarily going to work. The new dollar system is not going to work the same way that it may have in the past. Like there are probably changes in shape, and that's where that key question, where the dollar is going to be routed. Are they still going to route through London? Are they going to route through, another financial center? It's TBD how this continues to develop and plays out. But what you've seen in the initial reaction, and markets aren't perfectly efficient, right? Not all the information doesn't process or get baked into price all at once. It has to trend until it reaches a new kind of boundary constraint, and then works off of wherever those parameters take price. But the initial direction is what you're watching for your first kind of sense of what's going on and how markets are reacting or processing the information and ultimately reflecting it into price. So how do you know that, or what are you watching for, right? So this headline came out yesterday after market close. It was about 6 p.m. on the West Coast, Pacific time, when I saw the first alert that this agreement had been signed. And at that point, the only markets open would be like Tokyo, like Southeast Asian markets. Maybe you're starting to get into Sydney, and then Shanghai will open up later. But what you'd be looking for as European markets open up is what is their reaction, right? Because it's ultimately the euro, which is kind of the EU financial system startup project and home turf, lost out on this project, right? They're not going to be able to get these mineral rights which obviously they would want, right? They want the natural resources. Ideally, you'd want to see the commodities priced in your currency for the benefits it gives your domestic industry and economy. They didn't get that. So step one, Trump locked in the deal. And you kind of see this if you remember that famous photo from Pope Francis's funeral. Like it was just this past weekend, right?
It's them alone.
Yeah, it was them alone. Macron tried to join them, tried to butt into the convo. Trump said, "Shoo, get away." These are the parties involved. So it tells you who wins, who lost. France, in particular, EU in particular, and it's started to bake in. The first reaction is this is the MSCI Europe Financials Index is going to be your European banks, in particular. They get marked down. This is the first move. It's not done. Markets will trend from here, but usually that first move tells you where trend is going. And right now it's, first response is down. This is good for the dollar. Not so good for the euro. Now they can still get the peace, right? If peace is the goal, but we're going to find out here in the next 1 to 2 months whether I think long-term peace is something that they value, top of their list, or is it something else, right? They want to dominate, they want the industry, all of that. So we're going to find that out in the months ahead. Any other kind of feedback on that topic? Oh, just to summarize, we talked about the dollar rallying, but you've heard me say before, you get the dollar direction right, you establish that. That's your key puzzle piece for identifying where other important asset classes ultimately trend, right? And so you see this route, dollar up correlates with interest rates up, which is what you started seeing a sell-off in bonds today. So bonds reacted negatively on this headline, kind of pulled in that direction by the stronger dollar, which is, primarily driven by that dollar euro FX pair. And then the market paradigm that we've been on, we're in a fiscal pickle. I don't want to quite say crisis yet, but we'll call it a pickle funding situation in the U.S. So stronger dollar means higher interest rates just based on interest rate differentials, that effect. Higher interest rates in the U.S. generally just under the kind of Latin Americanization of U.S. fixed income markets and U.S. risk assets means, in effect, you get this kind of triplet: dollar up, rates up, risk assets up, which is why you've seen, the pair kind of return, especially today on this news: dollar up, rates up, equities up, and then risk assets. You also include Bitcoin, lump it in as a risk asset for now. May not stay that way forever. On the zoom out perspective, it doesn't look like a risk asset, but on the short term, when you get your eyes right next to the screen on the daily or weekly or monthly candles, correlates with your risk assets. And when you zoom out, that correlation disappears, which tells you it's not really there. The market has their perception wrong here. In my perspective, is what that's telling you. And then you see a flip on the other side of that, the negative correlation that you've seen with gold, right? Gold runs up as like negative correlation with the dollar, right? So you've seen the continuation of that gold sell-off after hitting that $3,500 resistance last Tuesday, right? So this all lines up. You can hear me talk about gold and the framework in more detail and then that episode I recorded with Nick yesterday. We'll have more insight on that. But the next thing I think to get into that's interesting on our perspective is what's going on in Bitcoin.
Well, wait, I've got a question, Matt. Where does this show up? And maybe we can table this for the next one, but I'd be curious. You're trading fixed income all day. Where does this Ukraine deal eventually start materializing in the capital markets, if at all?
Okay. So, eventually what this is saying is Ukraine's going to have access to dollars. That's the good thing for them. Good thing for us too, hopefully. When you look at how the Ukraine government has funded its war effort, and when you're in a war, you need bullets, munitions, explosives, people, soldiers, all of that. What you really need though is capital. Like you have to fund the war. When you run out of capital to fund your war effort, you're done. It's game over. You lose. You're signing a peace treaty that's not in your favor. All of that type of stuff. So if you look at how Ukraine has funded this war, there's some loans. There's some aid that's been given. Just kind of blank check. Here's some stuff, just based on charity. That won't get you there fully, right? You've got to raise debt, is how the game works at the sovereign level. And their debt funding, 43% of the capital has been funded in their Ukrainian local currency. I forget what it's called. I think it starts with an A. It's in the words of the Bitcoiners, right? Pardon me for swearing here, but it's a shit coin. So they've gotten 43% of their funding through convincing their own private sector in Ukraine to buy the war bonds, essentially, right? And kind of know it's make or break. Those are high risk, right? If you win, awesome. You're in a situation where you have to pay off those debt. If you lose, they're zeros, right? Confederate bonds in the United States, maybe an example, right? You pick the wrong money, it's a 0 or 1, right? So that's 43% of the funding they could obtain through just their own local economy. The other 57% has to be internationally financed. They have to go to global capital markets and borrow money in foreign currencies from their point of view to fund the war. And within that 57%, 2/3 of that is in the US dollar. So if you need a smoking gun that the dollar is, still here and matters in a massive way, it's in that Ukrainian debt distribution chart by market value. I don't have it, but I can fetch that slide. But it's 2/3 of the foreign capital funding is in the US dollar. And then, a fraction of that is in the euro. And then the next largest is the IMF's international depository receipts. And then you get a barely anything, a sliver that rounds to zero in the Canadian dollar and Japanese yen. They're chipping in, right? But it just tells you where the global capital pools are. They just don't exist in those other currencies. And even the euro, which wants to challenge the dollar, doesn't have the depth or liquidity or balance sheet capacity or international adoption to finance this war on their borders, which is most important to them, the EU themselves, right? So how does this impact global capital markets? All right, Ukraine is going to have access to these dollars, assuming that a peace agreement can be reached, which allows for, these projects to be developed, and come to fruition, right? So there's that ability on the table to repay their dollar debt, which on the net is good for your Ukrainian debt. That's dollar denominated. These bonds had been what I'd call kind of tip of the spear in the offshore dollar market. Most of the funding is coming from the offshore dollar money centers. So it's non-US capital, but it's dollars, right?
It's dollars. Okay.
So the offshore dollar, the fact that these bonds can be made money good because For the last 3 years, the trend of this war has not been going well, from that perspective. They're in a financing pickle, and it's been that way for several quarters now. Those dollar debts becoming money good, which are, primarily European, London, they're on their banks, their pensions, their financial systems balance sheet, predominantly. There's some domestic U.S. exposure through like emerging market credit funds, stuff like that, but not much, right? Like maybe 5 cents of every dollar, something like that. You make those bonds money good, which we're trading at massive discounts, right? They're yielding 15%, 16%. They're low coupon because Ukraine couldn't afford much, if any, interest, debt service while this war is going on. So these dollars, which are trading at, fire sale prices, in terms of their dollar price, those things start to look like money good with this deal, which is a favorable for European and British, et cetera, offshore money center banks, which are stuck with this debt, right? So it's actually a good thing for capacity in the dollar perspective in the offshore dollar system, which means there's more ability. Your mark to market on your balance sheet, market to book goes up. You have more capacity now to go out, make new loans, buy dollar debt, and where it shows up at the tip of the spear is on the treasury curve, right? So the way this works out and the whole kind of chain of flows should equate to treasuries coming in, right? Because like you used to think about it, like your most risky bonds on this thing you had to fund, and at some point you didn't know how much it was bad money, right? But you had to keep doing it because you cannot lose this war in Ukraine. Like I don't know if it's quite existential for the Western European democracies, but it very well could be, right? So you have to keep funding this thing. And while the bonds are priced at 50 cents on the dollar, and you have to keep refinancing those, rolling them over, like you literally have to keep throwing in good money after bad is what's going on. This situation is a major pivot because now it's like, wow, thank you, Scott Bessent. Did you just make the bad money good? All right. So now these 50-cent bonds, they start to get priced up closer to par as the market views, this situation hopefully progressing favorably for the Ukrainian bonds. That's healing your own balance sheet, your own exposure as a lender into this initiative. And so you have more dollar capacity to finance other things. And then your cost that you're charging other players, like you're willing to buy, dollar debt or treasuries ultimately, at the final kind of endpoint, the safest dollar debt in the perspective of this global dollar system, you're willing to fund those at lower yields, right? So ultimately this should, if it continues to work through, play out in treasuries, coming in, which we already kind of know that there's going to be cuts on the front end, to finance overnight funding, relieve stress, but that really only impacts the curve from 2 years and in. What really matters from treasury financing and this key objective that Scott Bessent has mentioned is he's watching the 10-year, right? He needs to get the 10-year cost of debt financing to come in to roll over, like I think $7 to $9 trillion. I forget what the exact number is that they need to roll over throughout the rest of 2025. So this is a favorable on that process from the U.S.'s perspective, but also if you're one of these European banks or London banks who's got or pension who's got massive exposure to the Ukraine's war debts.
Got it.
Got it.
Great. Okay. Well, let's flip over now to not to jump cut too far here, but to flip over into the Bitcoin side. You already touched on Bitcoin a little bit previously, but you're talking about sentiment now. So, got the slide up here, Matt. I'll explain a bit up front. Matt showed some of these charts last week. He responds to these. He receives polls from Goldman Sachs, and he's able to actually respond and see what the other institutional asset managers how they're answering. So, Matt, you've done this split already for us, but it already looks like it's a 6-5 bulls versus bears. I'm curious your thoughts on where this leads the Bitcoin chart from here, and then also your thoughts on how come there's 43% of people who just have no conviction.
Yep. Okay, so first thing we want to do, like if you're looking at a trade, is kind of take the temperature of where the participants are at, right? Because if you kind of get a sense of where is sentiment on the trade, that'll help guide you on where things may develop. And so just general background on Bitcoin right now. Just think about this. I know we have a lot of Bitcoiners in the audience who take a favorable view on Bitcoin, and what is broadly believed in that Bitcoin focused thesis to be happening with adoption of Bitcoin as kind of a dominant monetary paradigm, going forward, gradually then suddenly. But if you're taking kind of the rest of the world's or the rest of the capital market players' perspective, they don't follow this every day, and maybe they either are not aware of that thesis, they haven't locked in on it, they're not paying attention, or they just flat out don't buy it for a variety of reasons they have. And in my opinion, most of them don't hold up to water once held to scrutiny. But if you're looking at the rest of the world, right, because like if you think about the Bitcoin Twitter, right, or Bitcoin X, if you're looking at the hardcore faithful, the people who are going to be showing up at the Bitcoin conference in Las Vegas last month, they're already in and they're bullish, and they're going to be bullish regardless of anything you tell them. Their conviction is so strong. But where is the rest of the world? Because what matters for price is take the complement of the Bitcoiner group, the non-adopters, right? Get to see where they're at to tell you what's likely to happen on price ahead. So from that non-adopter, or they're not in the trade, they're not bullish yet, whatever, where's their sentiment, right? If you look at the headlines this year in Bitcoin, what's the ones that have probably hit your radar, like one, you think it's in a bear market, right? You hit an all-time high early in the year, and it's been a retracement since. It's caught a rally here in the last 2 weeks. But the headlines that you've seen, right? You saw the initiatives with the Bitcoin Strategic Reserve. There's been an executive order that you may become aware of that the White House has directed all the various branches of the federal government to consolidate their Bitcoin under a single office within the U.S. Treasury. They should not sell, and that they're going to look at any and all initiatives to acquire Bitcoin without increasing the public debt or adding further costs to the taxpayer. Right? That's probably all if you're not in the trade, and you're just passively following Bitcoin. Right? So if you start with that mindset, that'll give you the kind of the ground floor understanding of how things can progress in Bitcoin throughout the remainder of, let's say, the next 2/3 of the year, right? We just crossed over with April on the books. Third of the year is finished, right? So next 8 months, how is this likely to play out in the Bitcoin to dollar markets. So the temp check here from Goldman Sachs, and the survey is not done. It'll close at 11 p.m. at night, but there were already 850 respondents. So you've got a statistically significant sample. We can update the data as more responses come in. But yeah, the way this lines up, Cameron, you mentioned that 6-5 bulls to bears. That's for the players who are actually what I consider to be in the trade. They come up with the answer on this question. Where do you rank, right? Then there's options B and C are bearish or slightly bearish, which would mean you're a seller here. And then options E and F, slightly bullish to bullish. I take that to mean, are you a buyer or looking to be a buyer, right? And so from just in the trade, if you look at 100 investors, you've got 46 of them taking a view and expressing it. They're active. 25 bulls, 21 bears. That kind of gives you a sense of the tug of war, right? 25 versus 21. That's enough to win, right? And move price up, which is what we started seeing in the last couple of weeks. But then you look on, all right, how can things develop? And the way this develops is new money enters the trade, capital enters the trade, right? And so if you look at the neutrals, D, what I take those to mean, the 12 out of 100, they're watching. They're paying attention, but they're not swayed one way or the other to take a side. So they're going to choose at some point once they see more and enter the trade as it progresses, but they're on the sidelines, right? But then you see another 43% with no conviction, no view, not putting capital in the trade. That's by far the largest segment of the bulls or the bears. So it tells you, one, there's still the most dominant institutional perspective on Bitcoin is, I don't know, right? And so there's just future clarity to be obtained from a massive slice of the audience and capital allocators on which side they ultimately come in on. And our core belief, House View, I don't want to put words in Cameron or Dave's mouth as well, but I think they'd agree with me. We think this is a massively important asset, and this market will only continue to grow with future and further adoption. So the way I view this kind of perspective, 12% ready to hop in, bulls versus bears. What they're saying there is, okay, I'll hop in on direction. They're probably going to follow momentum. And then the other 43 will come in later, right? I don't know how much more momentum you need in Bitcoin. I mean, 12 years ago, I remember checking in on Bitcoin price while I was waiting for a DMV appointment, in Southern California, and prices were sub $10, and now you're at today a price of $96,000. So over like 12 years, $10 to 96,000. Like there's not many things with more momentum behind it than that. If you're looking for momentum, but there's still 43% of the institutional investor audience who's looking for further clarification on which direction they should enter this trade at, right? So in particular, it's telling, despite Bitcoin, everything it's done, there's still a lot of investors and capital on the sidelines that's going to need to pick a side here. So that's the backdrop, right? Bulls currently winning, but there's a deluge, I think, potentially coming. And if you think about this on every stage in Bitcoin's adoption, you start with, one guy, Hal Finney, joining Satoshi on his project and a sample size of 2. You pick up an audience or an adopter every cycle. And maybe through 2012, you get the hobbyist, the tech enthusiast. 2016, you get, I don't know, millennial crypto bro, they come on board. 2020, you get the average kind of retail investor who's like, hey, I think there might be a problem here with, $6 trillion in QE and another, 6 to 7 and unfunded fiscal spending on things like the CARE Act. You start to pick up that. But what you're seeing this cycle, especially with Trump coming out at the Bitcoin conference last September or last July or August in Nashville, reaching out to the Bitcoin audience, to join, that political coalition, doing things like focusing on, Bitcoin as a strategic reserve asset for the federal government. Like, you're seeing nation state adoption this cycle, is what I'm saying. And so this momentum that's really been one way. Eventually it will, consume and pull in more and more capital, and hopefully these 43% get wise to that before their purchasing power walks out the door. Well, I guess I'll just say politely. But I guess looking at the chart, what you're seeing, we'll go to the chart slide, Cameron. The bulls have really moved Bitcoin up very aggressively since that Liberation Day, sell off towards the mid $70,000 range. They've broken through, first you see that dotted red line. That was the prior downward sloping resistance, throughout the start, like call that Q1 of 2025, where, every time the bulls try to rally, they get sold, and you're seeing lower highs, lower lows. That's a consolidation pattern. It's a downtrend within a broader, bullish primary wave. And what you've seen, importantly in the last 2 weeks, the bulls broke through that dash line support wedge, and then they broke through, within, for 6 days you saw that what you call like a pennant, where you're seeing it converge. Bulls break through, it turns into what you call like a flag. It's more of like a parallelogram. And, the high, they broke through 94, 95,000. They just extended it today. So if you track that red shape, that parallelogram, the bulls are right now pushing that up. They're winning. Now they'll eventually give something back. The bears will sell against it. My point here is the bulls are coming in, right? Which is high signal, like all alone by itself. And so the further up move, like if you're thinking about the fulcrum here, and these are prior support lines that you're seeing in green. Well, actually support that turned into resistance. These last two on that upper thick green line that I'm kind of showing as what looks like the new, most probable range of paths where Bitcoin looks like it wants to trade in. As bulls, push that top green line up, you start to like increase your upside like horizon on where Bitcoin looks like it could realistically go in the medium term horizon, which, when I say medium term, I think for most people would think 6 months. In my framework, I try to think long term and where assets ultimately want to go. I say medium term is like 3 to 5 years. Long term is, 5-10 years out, but that depends on everybody's individual time horizons. If you're the longest term thinker, you can think in like, a lifetime is like 80 years, medium, maybe long term. But for some people, thinking ultra long term perspective, long term might mean half a century, something like that, if you really go out there. But my point is, what this looks like is the bulls are, pushing up that range of outcomes right now. Now, the bear case, over let's say the next few months would be within those two red lines that you'd call it a bull flag, right? You're looking for a continuation pattern. Once you break out, you continue the overall, primary bullish trend. But you're looking at a downside. I've shaded in those red regions. If we stay kind of in a bearish trend, Bitcoin's downside starts to look pretty limited. You've got good support lines. I think if you're a bull, you'd be looking to see a pullback to maybe mid 80s, and you'd call that a great buying opportunity, right? If you get that 74K, brief sell-off opportunity you had for a couple hours twice, in early April, you'd buy that hand over fist aggressively is what you'd be looking for the long term. And if you break down further below that, you have further support. You see that last green line I highlighted for where this could go. But on the upside case, if the bulls keep progressing, and I shaded these channels in green from here, you're looking at somewhat limited downside. You still got to break out above that red line. That you're calling that the resistance, the downward sloping, which you set earlier today, right? So you're continuing to just push like where that line would be up, like on a day-to-day basis at this point in the very short term. But you're looking at end of year, what's possible or even probable would be like on a bull move, something up to like 150K. And what does that story look like, right? From a narrative perspective, it's adding further chapters to this nation state adoption story. So this is the final theme Nick and I talked about on our podcast yesterday. All right, what's the most important thing from the nation states, the sovereign's perspective, in a time of conflict with other sovereign, powers? It's to keep yourself funded, right? Keep yourself funded to keep your war, to survive out your competition and what is a war of attrition. And the way you do that is keep funding yourself. So each nation state has chosen its own strategies. China said we're gold, through and through. Gold's their weapon of choice. Europe's is CBDC. I mean, I laugh just because in perspective, like it's become clear. We've talked about on the show, like they've announced October they want to do this CBDC release. They're going to launch the Savings and Investment Union to basically confiscate, almost maybe the right word, but they'll engage in fiscal repression with their citizens' savings, their deposits in the European financial system, and they're going to utilize those to fund the sovereign itself. And you see that kind of materializing in, how do you get that done? Well, usually it takes some sort of crisis, and European Commission sent out a message blast, a warning, late March to all its citizens: stockpile, multiple days worth of critical supplies for whatever is coming, right? Well, when you say that, and then things happen like the Spanish power grid going out this week, you kind of, it makes you pause and make you go, right? Think about, what may be happening if you read between the lines. But my point there is you're choosing your monetary tool to get through this era and keep funding your sovereign on what is an unproven, untested technology, right? And Bitcoin's not unproven and untested, right? If you're basing on Bitcoin, that is like Bitcoin is battle tested and hardened. It's been thrown out there as a public open source project, taking its lumps. In the early days, it had some key bugs to be worked out, all of that. But at this point, it's been market tested and hardened by real world economics and attacks. CBDC, that approach has not. You do not know at this point whether it will be adopted. You have to convince the holders of that money to take it based on force and force alone, right? Because you do not know, like they're not choosing it out of a fundamental choice that it's better money, which is everybody who holds Bitcoin right now out of the 21 million UTXOs. Some of them view it as like a speculative trading vehicle, but predominantly the coins have flowed into their rightful owners who view it as better money. And that adoption has taken place entirely organic. So my point there, EU, ECB have kind of thrown in their lot. They're pot committed now. They've bet their strategy continue to fund themselves in this, what's shaping up to be a global conflict. Maybe too early to call it World War III, but maybe it's not that hyperbolic to label it as that at this point. But they've thrown in their and they've made their selection, if you will. And then the U.S., funding itself, like you can continue this treasury route, but or the existing route of public debt financing through unbacked, credit dollars. But that's going to lead to, exponential blowout in the debt, and it's not a long-term strategy. So you need something new to continue funding the state, and that's where, in these types of case studies in history, this is where monetary transitions come in. And what you would want to do is, I think, from the perspective, if I'm in this seat, I want to throw out multiple options, which is what the U.S. has, by the way. We have a dollar option, offshore dollar funding. We have a gold option. We have a lot of gold. I'm not one of those people who believes that gold has all been, we've been sold down the river by prior administrations, and all the gold in Fort Knox is actually going to turn out to be gone. I hope that's not the case. If it is, we're in a bad way as a country for what's ahead of us, in my perspective. And then you got the Bitcoin route, right? And so your choice here, you're not in a position of ability to be picky and choosy and choose the winner. You need to go with what gets the job done. How can you obtain financing? And so when you open it up to those three, right, and there's only three choices in my perspective to choose from, open to everything, but ultimately let the market dictate the winners and what's going to keep you funded. That's the best strategy in this case. So for perspective, China's locked itself in with gold. It's gold or bust. Europe is crypto, CBDC or bust. Good luck with that. Russia is actually interesting. They're kind of Bitcoin if you read between the lines. And then U.S. is all the above, but we're going to go with what works. And it's becoming increasingly more friendly to the Bitcoin option. So that's what you're watching for in the months ahead. And the new Trump campaign, the massive pivot he took on Bitcoin, that started with the Bitcoin conference of 2024 in Nashville, continues with the setup of all these entities, the Strategic Bitcoin Reserve, and then there's going to be other shoes to drop on that sequence, in my perspective, to watch for. Look for Bitcoin. If it can keep the state funded in this conflict era, it will be the winner. And Bitcoin itself, as what it represents with its own properties, has a unique way that it can get that job done, right? So I think that's what you're continuing to watch for as this kind of chart progresses over the rest of the year.
Okay.
Bullish.
Yeah, bullish.
Maybe not after this type of price run, but if you look at these candles, like it's just up and to the right after that sell off. There's no retracement waves, after these, you see it take a big run starting on mid-April. What I'm looking at is when it got down to like 74,000, it'll go up. And then normally you'd see in a market, there'd be some retracement, but it's just like it's flattening and then up. It's like, so that's all just, one big wave, which tells you like, yeah, it's just getting bought here. If you want to be bullish, you're looking for dips as an entry point because you don't want to buy tops ever, right? But the dips have been hard to find since that those ones we saw in early April.
Yeah.
Well, so when we speak about, Bitcoin and some of its features and things like that, I really wanted to put some slides together on cybersecurity, which is our third topic today. The main headline that came out today was from Kraken. They've identified a North Korean hacker who tried to get a job at Kraken. And I'm going to go through a few different components of all of this.
Let me chime in there.
Yeah.
One of our best friends, Marty Bent, runs the TFDC podcast. It was we were in New York for Bitcoin Week. All our friends were in PubKey celebrating at the end of the day. Told him this. They're trying, like the nation state hackers are trying to embed themselves into our companies, our organizations, our custodians, and yeah, exactly, like right here confirmed.
Yeah, and I think anybody who's worked in tech for the last 10, 15 years also knows this, right? You've had potential spies joining your companies, whether that's large multinationals, think to your Amazon, Microsoft, etc., all the way down to smaller consulting companies, right? So this is not necessarily a new thing, but I think one critical piece of all of this is that you're seeing nation states targeting the cryptocurrency community broadly. And we're going to focus on Bitcoin, but I'm going to get there by going through what happened to Bybit, which is a non-Bitcoin story, but I think is really critical to understand what's actually going on here. So first off, what happened with Bybit, right? So if you understand or if you've heard the Lazarus Group, which is a North Korean hacking group, before they've done several other hacks, all with the goal of stealing crypto from exchanges. So in this situation, it's really hard to actually break protocols. So even as much as we're all pro Bitcoin here within Build, ultimately I'm not going to speak to the crypto security, the protocol security that other chains might have. This is purely a human social engineering situation. So the first piece here is in the top left there, developer one's macOS workstation was compromised. How? Likely through social engineering, getting a, in quotes, friend to convince them to download this Docker container that helps them with apparently predicting stock prices, right? So this is unrelated to your daily work at, let's go with Bybit, but you're doing this on the machine. The secondary piece of all of this is actually how other types of cryptocurrencies work. In this situation, Ethereum, you're able to actually do very complex types of contracts, which is really interesting from a technical developer's perspective, but from a safety perspective, it can offer a lot of issues, right? So in this situation, it's really difficult to go and audit every single piece of, in this case, JavaScript that was fetched from an AWS bucket to confirm that it's still showing you exactly what you're expecting. So in this situation, you're seeing nation states, North Korea, come in and say, it's actually easier for me to steal crypto from different exchanges by saying, I'm going to join the company, or I'm going to convince somebody to install applications that are maybe outside of the purview of their traditional or their normal IT infrastructure. But what does this all come down to? Ultimately, Lazarus Group only cares about BTC. So all of this stuff that's been happening, you're seeing it across multiple different hacks. They're stealing Ethereum, they're stealing blah blah blah, whatever Fartcoin. I don't care what they're stealing. Ultimately, though, they're trying to bridge that back into what? Native Bitcoin, because like Matt has said already, you're seeing nation state adoption. So when you're trying to find ways to fund your sovereign, when you're trying to find ways to store your value, maybe make transactions within a non-permissive environment, you're trying to find the type of currency, the type of solution that's going to offer the features to let you do that. And you're seeing that right now with, in this situation, again, North Korea going straight to Bitcoin. They didn't even care about hiding where the cryptocurrency was going. There's been a lot of conversation over they could have used different types of mixers, etc. But for some reason, in quotes, they just went straight to Bitcoin and didn't care to even try to hide where it was going. Because ultimately it doesn't matter, right? It's North Korea. What are you going to do? You're going to go send the FBI after a person. It sits in North Korea. It's not going to be easily done or possible, right? So as we talk about these different exchanges and all of these are going to come out with their different security implementations. Are going to talk about how their cryptocurrency has the best or better or some advancement over Bitcoin or over some other type of currency because it has XYZ feature. The thing to remember is the way into these companies is not through the actual protocol, it's actually by social engineering. And one thing that I think to call out here is there's been a lot of talk in Bitcoin communities and adjacent communities about, I'm worried about losing my coins, so I'd rather just buy the ETF. I would rather just buy it on the exchange. They'll keep it safe for me. Well, a common response to that is don't worry, we have insurance. But what does that really mean? So I want to call out here. So Brian Armstrong, CEO of Coinbase, in one of his posts recently, he mentioned that the Bitcoin ETFs, now the second largest commodity ETF in the US behind gold, Coinbase custodies 90% of those assets. So when you really think about all this different choice you have in the ETF ecosystem for Bitcoin ETFs, you're really 90% of the time, you're just buying Bitcoin custodied by Coinbase. And so Coinbase, I'm sure, has lots of really important and knowledgeable security researchers, but at the end of the day, what happens if something goes wrong with Coinbase? You don't have access to your own keys, right? You can't ensure that it is not being moved. So you have to trust that Coinbase is doing the right things on their side to safeguard your assets. But at the base layer, do they have insurance? Yes, but it does not necessarily cover your Bitcoin. It covers Coinbase from you or from others who might try to sue them for doing, for losing certain assets or for trying to recover some of those funds. And another piece here is MSTRs. Want to throw that up there so we all have the same language. You see a lot of people looking at MSTR as a way to get leverage access to Bitcoin or some type of, it's a price action adjacent to Bitcoin. But ultimately, the insurance does not cover you as a holder of MSTR having access to some underlying amount of Bitcoin. It just covers MSTR's access to that Bitcoin, right? So again,
Hey, Cameron,
yeah,
even in circumstances where you can file a claim, I'm thinking of FTX claims. My understanding is in most of those circumstances, it's the dollar denominated, it's the dollar value of what you lost at that time. So if
right.
Am I reading that right? So you might get your dollars back of whatever. Oh, well, don't worry, sir. Your Bitcoin was worth $25,000 at the time. Here's your $25,000. Oh, well, no, it's worth 4x. Am I reading that correctly?
No, that's exactly right. So, and in the case of Coinbase and MSTR, they're also calling out that their insurance might not even cover the entire amount of Bitcoin, dollar denominated, or whichever currency that insurance policy is denominated in full. But you're right. Most insurance policies today, and I just want to shout out Anchor Watch, Rob Hamilton, Becca Amelé. They've got their company also focused on insurance, but they very clearly call out it's dollar denominated, right? So if you think you have $50,000 worth of Bitcoin, you buy an insurance policy on that for 50,000 US dollars. Let's say Bitcoin appreciates, you're actually only covered for the amount that in dollars that you've covered by insurance. So you do need to be very aware of that, and especially as with Matt's chart a few slides back talking about institutional investors coming into the space, as they're looking at their options here, they're saying, oh, well, I see that by going through Coinbase, it's really easy. I just have to click buy and it's there. It's really important to understand at the base layer, not just what's going on with the protocol itself, but also what's going on with these companies themselves, because there's two pieces of the puzzle. There's the actual code, which enforces the rules, and then there's the other half of the coin, which is the people who are actually pushing the buttons to make the decision to move your assets. So I want to throw this slide up here just to kind of set the stage here, which is lending. So we know that using Bitcoin as collateral for lending has become much more popular. You're seeing it in the news continually. Cantor Fitzgerald, right, mentioned they want to do $2 billion US dollars into Bitcoin lending. You're seeing a lot more hullabaloo around Bitcoin bonds, etc. But as I mentioned beforehand, it's not enough just to say, oh, there's some front end that I'm looking at that looks different than everybody else that's providing me loans or allowing me to borrow at a certain rate, maybe lower than I could get elsewhere. Ultimately, the question is, how is my loan collateral secured? And so as of today, I'm not going to go into every single one of these, but this is the snapshot of the market from Galaxy Research 2024 Q4. Obviously, Tether is a massive component of that. Most of these don't even lend US dollars, right? They lend some type of other intermediate coin, whether that's a stable coin or that's some other type of cryptocurrency asset, some type of FX pair. And so as you're going through that, you're realizing, where am I actually custodying my Bitcoin on the base layer? It's probably with a subset of these names here or some other ones, right? So as you're looking at finding a borrowing partner or a lending partner, you need to be really cognizant of the underlying security, not just to say, oh, it's Bitcoin, I'm good, but to actually understand, how are we custodying it? How is it actually secured at the human level as well? And I just want to throw up this chart, this table from Unchained. I thought they did a good job of trying to outline the trade-offs, right? Ultimately, there is trade-offs. There are trade-offs anytime you're using something that's more secure. That often means it's maybe a little bit less easy to use on a day-to-day basis, right? So in your exchange account, so thinking like buying this on Coinbase, obviously very easy to move around. You have 24/7 access to move your Bitcoin in theory, but again, we're seeing it becomes it becomes a high value target for nation states. And then as a holder of Bitcoin, you might be wondering to yourself, how do I ensure that my Bitcoin is not able to move without my permission, right? And so there are other options that we can go into, but ultimately the only options, if you truly care about making sure that your Bitcoin is not going to be moved without your permission, is having at least one of the keys in a quorum, or having one of one, right? Which I don't recommend, but maybe you'll do that. So how might Bitcoin's protocol design encourage these better custody solutions, right? So why is it that something like Ethereum maybe tends to have more of these hacks occur on those chains rather than with Bitcoin, right? And I personally think that comes down to the design of the Bitcoin protocol itself, right? So for comparison, with Ethereum, you've got all these really interesting, cool, complex, from a technological standpoint, cool and complex contracts, scripts that you can use, L2s, etc. But when it comes down to storing your value, making sure that value is not able to be stolen from you, I think the design of Bitcoin using Bitcoin script, which is simpler, no ability to call external contracts or resources where you don't have visibility into the actual code that's being run, showing raw transaction details. Another component of that Lazarus hack, if you want to go do the deep dive research, is it's really difficult actually to see exactly where the final funds are going to end up, because you have to go through all of the contract logic. And again, some of that is called through external resources, right? So there's no way for you to fully verify all of this every single time. Otherwise, it would be a massive undertaking. And then finally, Bitcoin multisig is natively on chain. This is something that's a little bit different. You might see other types of cryptocurrencies advertise that they have native on-chain multisig if they're a Bitcoin variant or something like that. But Ethereum, it's actually up to the wallet providers. So you have to already trust that the implementation provided to you by a third party implements multisig in a way that is safe, secure, risk mitigated, right? But with Bitcoin, we know it's baked into the protocol. So with those three things, as a bare minimum, I do think, from my opinion, again, it favors better solutions, or it pushes implementers into a situation where they're able to actually design custody solutions on top of Bitcoin that prevent things like the Lazarus hack, or prevent things like accidentally signing a transaction and sending it off somewhere that you didn't expect it to go. So that was a really quick dive into some of what's going on right now. But again, none of this is to say that just because a company has built their solution around Bitcoin, is necessarily safer. You still need to understand how their human side of the business operates, right? If you're hiring a bunch of North Korean spies, it doesn't matter how safe and secure Bitcoin's protocol is, you're still going to have a really bad time.
And look, the moral of the story here is if you're into Bitcoin, you want number go up technology, but the problem is the more number goes up, the more people are going to want to try to come get it. So you you can't assume whatever you did years ago is going to work in perpetuity. You've got to keep re-examining your own threat model, custody model. That's just part of it if you're gonna self custody. So this is good stuff, Cameron.
Great. Well, I know we've gone over an hour. We usually try to at least take up an hour, if not just a little bit more there. But any last thoughts from the group here before I let everybody go?
And kneel down, run out the clock, Cameron.
No, all
No,
right.
well, we'll check in next week, see the follow up on these stories. Judge ourselves by what's coming ahead, but watch out for further market reaction, further events on top of this Ukraine deal. We'll be watching the dollar closely and everything that follows after that.
And just a reminder, if you haven't watched Matt's podcast with Nick Bhatia yet, highly recommend. Do that next. Do that tonight. It goes in much further detail, like Matt was saying, on several of the topics that we've touched on here today. Great. Well, thank you everybody for joining this week's Weekly Roundup.